Good afternoon, traders and investors. Will back here with another one, coming to you with a Sunday night video, guys. And it's that time of the week again where we go over the top 5 options plays for the upcoming week. Now, keep in mind, all of these plays are going to be for selling options, more specifically for selling put options as part of the larger wheel strategy that we run on the channel. One of my favorite strategies in the world, guys, just because it is a very easy strategy to run, whether you're a beginner, intermediate, or even advanced investor. And it requires very little time management as a whole. And the win rate is very high, usually 90+% of all the trades we take are absolute winners. So in today's video, guys, I have a few things prepared for you. Number one, we're going to go over a few of the strategy rules just to define the context of what we're trying to do here. Number two, we're going to go through last week's top 5 options plays and see how those performed. And lastly, conclude with this week's top 5 options plays, of course. And as usual, you guys know me, I always have a lot of bonus plays prepared for you guys at the end of the video as well. So without further ado, let's get right into it, guys. So in the context of the markets coming up this week, it is going to be arguably one of the most volatile weeks of the entire summer, and that is for two very clear reasons. Number one, we have a lot of macro news this week. So we have 2 jobs report, one on the Wednesday and then one on the Friday session, culminating with the non-farm payrolls, arguably your most important jobs report of any given month. So those 2 reports on the Wednesday and on the Friday should give us a good indication of whether or not the labor market is still healthy or is facing certain challenges. Then, of course, on the Wednesday session, guys, we get Jerome Powell coming out with Federal Reserve, and they're going to give us an interest rate decision. Now, the consensus is not to get any interest rate changes over the month of July, but we will get to hear his updated stance on the status of the economy, the jobs market, and the inflation trend, which has been coming down. So altogether, macro news this week should provide a decent amount of volatility. And then, of course, guys, more volatility gets added by the sheer amount of large cap earnings that we have this week. Now, most of it will be dominated by the big tech names. On Tuesday, Microsoft and AMD. On the Wednesday session, Meta, ARM, and Qualcomm. And on Thursday, we obviously have Amazon and Apple. So if ever those earnings are not well received by the market, as we saw with Netflix and Google, expect some continuation of volatility and perhaps expect some continuation to the downside. Obviously, those are not the only big companies reporting this week. There is a ton, guys, right? MasterCard, ON Semiconductor. We obviously have a lot of oil companies this week too. We have right, SoFi, PayPal. We have MasterCard on the Wednesday morning before the open session. So very substantial amount of earnings this week, which could add to the volatility. Now, in terms of how the markets are performing right now, well, we do have the futures opening very green, which leads me to believe that the Monday session may just be another categorically across the board bounce session for the markets as we continue to battle with oversold conditions. Now, keep in mind, guys, on the context, we are in a daily downtrend, maybe expecting a lower high into a revisit of the lows. Now, a revisit of these lows would obviously be predicated on poor earnings from major tech. So just please keep that in mind. But don't forget who is in control of the long-term timeframes in these markets, guys. Clearly on the monthly, we have extended bull control, and clearly on the QQQ as well, we have extended bull control. So I do still believe that these short-term dip opportunities are just that. Dip opportunities that are very good buying opportunities. So even if we were to have some extended follow through throughout this week, guys, we're coming into some very large support areas on the SPY and some extremely large support areas on the QQQs as well. And that will be met with some heavy buy pressure by the bulls, in my humble opinion. So due to the large standing bull control of the overall larger timeframes, guys, I wouldn't be too nervous even if we do get a little bit of downside continuation this week. However, just be careful in your trading, and you'll see that most of the names that I've picked for this week are not really correlated with earnings that we have this week, and also have a very decent margin of error if ever the markets continue to their downside. So without further ado, guys, let's get right into today's video, and we're going to start it off with a few of the strategy rules. Now, I'm going to go through these very quickly just because I have a 30-minute video, guys, on the entire strategy. If you haven't seen that video, I'll put it top right corner right now in the video, and also leave it down below in the video description. It goes over the entire strategy, how I pick my stocks, how I pick my strikes, and how we just manage the strategy as a whole. So let's get into it, right? So for the actual put reel, to sell puts, what are we looking for? Number one rule to never forget, guys. Never write any puts on a company you do not want to own. You should only be writing puts on high conviction companies for you. That's just because if ever you get caught and you are potentially at a loss, you want to at least be in a loss with a high conviction position, guys. Because if it's a stock that you don't like, you may just get a little bit nervous and cut the loss a little bit early. So please keep that in mind. only ever write puts on companies that are extremely solid to you. Number 2, we want to be going with stocks that are in a monthly uptrend or a long-term range. This just ensures that we have a decent probable bounce coming. Now, number 3, no earnings this week, guys. Never write puts on earnings. I never advise to do it, even if you do see me do it myself on my own trading account, guys. It's extremely volatile. You've seen what happened with Nike, Starbucks, Salesforce, and the list just goes on, right? Oftentimes, earnings can be very, very volatile and have very bad surprises to the downside. So in order to not get trapped and take oversized losses, if you want to be safe, just never play a company on short puts, with short puts rather, that has earnings this week. Number 4, we want to be targeting stocks that are in an area of support or breakout retest, just because the odds get more and more in our favor. So pull up Autodesk. This would be a very large area of support. You can see this is a weekly chart. This is over 6 months worth of support. Usually when we're writing puts at these lower areas, it gives us a very low chance of being assigned. And if ever we do get assigned at the lower end, we usually tend to get a little bit of a bounce. Now, the breakout retest trade is also a very high probability trade when we target a previous range or maybe an all-time high. If you get a break above and then retest it, back testing the prior resistance, which is now support, usually this provides a very high probability trade for at least some continuation. So that is the breakout retest trade. Now, moving on, guys, we want to be writing these puts. These 2 points right here go really hand in hand. We want to be writing puts at or lower than the expected move. If you don't know what the expected move of a stock is, guys, you can always go on optionsai.com. They have a free tool to do it. So let's say I have Airbnb pulled up on the screen right now. You can see the expected move to the downside is 135.43. So if I'm like looking to write puts on AMD, on Airbnb, excuse me, this week, I want to be writing puts lower than the expected move. This is a probability that Wall Street designs to give us a criteria of whether or not a stock is moved beyond the oversold conditions or is within the price range band, right? So if we're always trying to write below the expected move, if it does come below the expected move, usually we get a little bit of mean reversion and pops us back above the expected move. So we want to be coupling that with writing on a red or flat day as well, guys. Goes without saying, if we have a red day to open the week on Monday or Tuesday, bringing us down into the expected move, well, then we can write even lower and lower and lower than the expected move, which increases our probability once again of that mean reversion, the stock market having a little bit of a bounce and pretty much ending us with profit in our pocket. So try and combine these 2 points together, guys. You will never see me chase the market. I'm always writing puts on red or flat days on stocks. Now, the next point, guys, is in terms of how much ROI are we getting. So we want to be targeting between 0.5% and 0.75% in weekly premium. What does that mean? So let's say we have, for instance, Palantir's options chain pulled out right here. What you want to see, guys, is you want to see about 0.5% on the strike that you're looking for. So if I'm looking for, let's say, the 25.50 strike on Palantir, all we have to do to derive whether or not we're getting 0.5%, guys, very, very easy. Just divide the premium you're getting here, 18 cents, by your strike price, 25.5, and you will see this represents about 0.7%, which is within our rules. So I'm always targeting between 0.5% and about 0.75%, guys, just to be on the safe side. Anything more than that, and we just end up too close to the current stock price, and the risk of assignment gets quite large. So the reason I choose the 0.5% to 0.75% is because it provides a very good trade-off between risk of assignment and ROI. In terms of ROI, we still get very decently paid, guys. If we're always writing 0.5% every single week on our capital, that means that in any given year, without compounding, we should be making 0.5 times 52 weeks, which is about 25%. Very decent ROI, if you ask me, all while being conservative, right? So this is the amount of weekly premium that I go for. And if you want a quick rule of thumb, guys, just divide the amount of cent increments by the strike price in your head. So if you want to know if 0.5% is right here, all you have to do, divide 25 by 2, that's about 12.5. That's how much you should see on the bid right here. And if you want me to do the math to show you guys that the math works out, well, if we had 12.5 cents here, 0.125, divided by your 25 strike, that is literally 0.5%. So very easy, quick mental math way of going through a ton of different options chains in a short amount of time, just using a little bit of mental math. Now, Moving on, we want to set a take profit at 90% of the contract value. Since we're always opening these trades on a Monday or Tuesday, very probable, guys, that by the Wednesday or Thursday session, the contracts are almost worthless and that we're almost 100% in profit. But you got to lock that profit in. So that's why we want to take 90% of the contract value as a take profit order. So moving on, if ever we do get a sign, so if ever the stock ends below our strike price and we have to buy the shares, how do we get out of the position? Well, we're going to be writing covered calls. The reason we call it the wheel, guys, is because we're using short puts to get into a trade, to buy into a position, and then we're using covered calls to sell out of a position. Think of this, a short put, as a buy limit order, and a covered call is a sell limit order above the market. Now, if ever we get a sign, guys, we want to be writing covered calls that represent 0.5% to 1% in weekly premium. That is your ROI. And then we want to be writing at the assigned strike price or one strike higher. The only time that I'm going to be writing one strike higher than my assignment price is, let's say, for all intents and purposes, I get assigned on Amazon last week at exactly 182.50, right? We're there right now at the 182.50. Let's say I got assigned last Friday. Well, if ever Amazon has a very green day on a Monday, opening up 185, 186, then that's the only time, guys, where I will be probably writing covered calls one strike above my assignment price. In any other case, I will be writing directly at my assigned price. So hopefully that makes sense. So that's pretty much everything for the strategy rules, guys. Now let's dive into last week's top 5 options plays. So the first one we were looking at was TSM. Now, TSM had been having a major dip, obviously as a byproduct of the semiconductor sell-off, and we were looking for semiconductors, or rather for TSM, to really find a temporary bottom in this lower location right here. We were targeting the 152.50 range. However, we wanted to take this trade on the Monday and Tuesday session. We did not get any downside continuation on Monday or Tuesday, so I did not take this trade. The 152.50s were not available. The 155s were available, but it was slightly too close to the current share price. That being said, on the Wednesday session, we did get a dip, and I did take the 152.50s myself. So on the Monday or Tuesday, no trade, but if you're still open to taking this one, guys, it did open up on the Wednesday session. We got some great premium here down at the 152.50, and you can see that we did end the week well above that. So that could have been some easy money in our pockets. Very, very happy with the way this trade played out. Although we didn't get an immediate entry on Monday or Tuesday, I had it on the watch list and then took that same trade on the Wednesday session. Now, the second trade we were looking at was AVGO, and AVGO pretty much did the same thing. We were looking for AVGO, guys, pretty much in the 145 down to about 140 range, the start of this very large area of support right here. And the same thing as TSM happened, guys. On the Monday or Tuesday, there was no trade just because the market pulled away from us and there was no premium down here at all. So no trade. However, on the Wednesday session, it did definitely open up some premium, guys. The 145s all the way down to about the 143s had some decent premium on them, and we did end the week a lot higher than that. So that could have once again been a nice profitable trade. I did not take this one. I took TSM myself, but still the logic was sound and the trade setup was sound as well. So hopefully you guys were able to take some good technical analysis from that and make a little bit of profit. Now, moving on, the third stock we were looking at was Fortinet. And we've been trading this one so often on the channel, guys, just because it is really coming into a large area of support very soon. And you can see the bulls have been playing great defense for the last 2 months in this lower $57, $56 range. That being said, the strikes that we were looking at for last week, because there was a bit more volatility, were a bit lower. So we were looking really for the $56 strike or $55 strike, a little bit below the price. Now, happy to say, guys, on the Monday session and the Tuesday session, those strikes were both open. We could have got some very decent premium at the 55s and even the 54s. Now, I went a little bit more aggressive with it. I went with the $56 strike, but anything 56 down to $54, guys, would have really been a very profitable trade for you, because we did end that obviously over at $57. So very happy with the way this one played out as well. Another win. So 3 out of 3, guys, pretty much definite wins. Yes, you could have waited on the Wednesday session and got even better pricing down below at these strikes, but a win is a win regardless of when you took the trade. You should have ended up in clear profit. Now, trade number 4, guys, this one was a little bit tricky. So in terms of Oxy, we're looking at OXY Petroleum, one of Warren Buffett's favorite energy plays as a whole, and we were really looking for it at the bottom end of this previous support range right here, talking about 61 down to about $60. Now, I was targeting the $61 puts, and I did get assigned some shares of OXY. However, if you were a bit more patient with it after the Monday and Tuesday sessions, you could have actually got even lower strikes. You could have got the 60s or even the 59s. So if you were a little bit more patient than I was, the 60s and 59s paid decently because it ended over there. You would have been able to collect 100% of that premium. However, if you're like me and you were assigned the $61 strike, well, at least the stock price is relatively close. In terms of writing covered calls this week on OXY, it should be a fairly decent endeavor. Let's have a look together, guys, for writing some covered calls for all those of you that were assigned with me at the $61 strike. Let's take a look right here, and you can see we have about 51 all the way to 55 cents. Let's call it a midpoint about 53 cents, right? So paying decent. It does represent our minimums of 0.5% to about 1%. Divide this by the strike price, right? 0.53, let's say, divided by 61, you can see we're getting about 0.86%. Not quite 1%, but very decent nonetheless. So I would not be opposed to writing the $61 covered calls. And let's say we get a bounce on the Monday session, bringing us all the way up into the 61s. These call premiums will be even better. So looking forward to being able to writing covered calls on OXY. Still love this stock, and I'm still very bullish on this stock because I am expecting a potential rally in energy stocks as a whole, trying to break above the all-time highs. This is the XLE ETF, which is mostly comprised of oil companies. And as you can see, we are pulling off the breakout retest of this prior range on the monthly time frame and looking for a little bit of a breakout. So I would not be too worried about OXY at all. Fundamentals of the company are quite good too. Now, the last trade we were looking at for last week, guys, was Amazon. And Amazon, we were really looking for it at the 175 mark, the start of this entire large support zone in the green box, right? So 175, guys, was about right here. And the reason I liked it because it's previous all-time high support, or previous all-time high resistance back here, rather, which is now acting as big support for the bulls. Couple that with the fact that it has acted as recent support for the bulls from pretty much the month of January all the way through May. So tons of short-term support in this area. I liked Amazon, and that's why we were looking to play it. So Amazon, in terms of the 175s, guys, that's what we're looking for. And on the Monday session, you can see it was a red candle, but it did move a bit higher than the than the previous Friday session and the Tuesday session as well. So early on in the week, guys, there wasn't really much in terms of a trade on Amazon at the 175s. There just wasn't much premium there. However, later on in the week, in the Wednesday session, there actually was some decent premium, and I took this one myself. I went a little bit more risky with it. I went with the 177.50s just because I love this whole range, 177 down to about 170. Very nice range for Amazon. So I was able to close this trade pretty much 100% profitable. But for those of you who may have been a little bit more patient, went with the 175s, a little bit more conservative as well, there was a trade to be made there. And anybody who would have traded any 170 contracts as a whole, right? 177.50s, 175s, doesn't matter. You would have ended up with 100% profit because Amazon closed the week well above that. So another nice trade in the books. So we pretty much went 4 for 5 last week on the calls, guys. Very happy about that. And the one that didn't go in our favor, it is still very close to our price, which is OXY. So I would not be too worried about it coming into this week. Now, that is everything for last week's top 5 options plays. Let us dive into this week's top 5 options plays. And you'll see that there's a few recurring ones just because I still love the levels. Now, number 1 is going to be TSM. So TSM, I know what a few people are going to say. It might be a little bit dangerous because of the earnings that we have for semiconductors this week, right? A couple of them. AMD is one of them. ARM is another one. Qualcomm, Lam Research are going to be some of your major semiconductor plays. However, I don't believe that TSM is going to be affected as much as the rest of semiconductors potentially. That being said, even if they are affected, guys, we're going to go very, very conservative with this one this week. And TSM is really coming into a gorgeous area of support, 154 down to about 150. And below us is an even stronger one, right? This one whole 144 down to about 125. I know it's a lot further down, but just leading you guys to understand that we're coming into a very large area of support, just looking for a potential monthly higher low for the continuation of the trend. They had their earnings. I love their earnings, which is why I continue to play this company. So moving on, guys, you're free to take this one or not financial advice anyways, but I will be playing this one even though we have some semiconductor earnings. As I said, in my opinion, it stands to be one of the ones that are least affected by those earnings. So that being said, the expected move on TSM this week is 154.54. So let us see, can we find some premium below this expected move? More specifically, trying to get as close as possible to this 150 mark, the lower end of this tiny little support zone that we're working with right now, right? So let's go have a look together. Let's go shopping for some TSM options, shall we? So let's pull it up right away. Give me a quick second. And here we are. So TSM, can we find anything around or below the expected move 155? Let's say closer to about the 150 mark. And as a whole, guys, you can see even at the 150s right now, which is significantly below the expected move, it is paying 0.5%. 0.5% would be exactly 75 cents. We're getting 78. Even the 149s are not too bad, guys. So the thing that we're going to try to do on TSM is if ever we have a negative Monday or Tuesday session and the stock drops a little bit, guys, that is going to be maybe freeing up some even better premium at lower strikes. For this one, we want to be very conservative. We want to be going as low as we can possibly go in this options chain while still getting roughly our 0.5% rule to give ourselves the best margin of error to protect against those earnings. That's why I favor 150 and below. So for me this week, depending on the size of the move on Monday, guys, obviously if Monday opens up and the markets flip from the futures right now and go significantly red, and let's say TSM drops all the way 157, 155, well then that'll probably even free up maybe the 147s, 145s. So for what I want to do, guys, this week is I want to be going at least the 149s down to about the 145s as low as we can possibly get while still getting our 0.5% for such a glorious company such as TSM. So that is going to be the play that I'm looking at for TSM myself specifically. I do not mind being assigned, guys. It's rule number one. I want to be assigned TSM at these lower levels because I think later on, guys, maybe in let's say a couple weeks, when we get through these tech earnings and we get through these sell-off conditions, I really think TSM is poised to be one of the candidates that recovers the most quickly from all the damage that's been done, just because of the outstanding fundamentals that they showed and the outstanding demand that they still have for their business going through the rest of the year. That is my logic behind that play. But as I said, feel free to take it or not. Stock number 2 is going to be Fortinet. So Fortinet, the reason I choose this one, guys, is because we really don't have any cybersecurity plays whatsoever. And you guys have seen, right? Fortinet, despite the massive technology sell-offs, really hasn't moved. So holding up better than others right now. The expected move on Fortinet is about $55 for the week, which brings us right into our very large area of support, which I truly like. So let's go shopping for some Fortinet options and see if there's anything available on Fortinet below this $55 expected move. So let's go have a look. You can see right here what is paying at $55. You can see it right on the screen. At least we're getting 37 cents for 55s, but that is at the expected move. We want to be going a little bit lower, right? So the 54s currently are paying about 22 cents. Not quite enough premium. You'd want to see closer to 25, 26, 27 cents for this to make sense for you. So that being said, if ever Fortinet has a little bit of a drop, Monday or the Tuesday session, bringing us down into 56, maybe even high 55s, that will most likely free up even potentially the 53s. So the strikes that I'm looking at this week, guys, depending on the size of the move. Obviously, if Fortinet has something like a 3-4% negative day on the Monday session and we come into the 54s on the Monday or Tuesday, well, then we have to go even lower. Think 52s, think 51s, as low as we can get in this big support range while still getting our 0.5% move. So we have to be a little bit, we have to be a little bit variable with the analysis right here. We are trying to do this, at a first glance, we want to take close to the 54s, but like I said, if we plunge too much, I'm not going to stay stuck on the 54s just because I said that level. We're going to be going even lower, guys. The trick is to get as low as possible below the expected move so you can potentially expect a little bit of mean reversion intra-week. And if we're riding all the way down here, that bounce is going to make these contracts very worthless very fast. That is the name of the game. So that's what the trade that I'm looking at on Fortinet specifically. Now, trade number 3 is once again going to be OXY for the same reasons as last week as well, right? Gorgeous range of accumulation right now. And what is OXY trying to do, right? Very tight range of accumulation. Where is it accumulating, guys? Above this previous area as well and above our major support zone down here. So looking for a potential monthly uptrend formation on OXY as a byproduct of a larger energy bull market that is potentially coming in the next few months. That being said, I really do enjoy this lower support level, even though the larger one is significantly below us right here at about $56. I still like the temporary one, guys. In my opinion, OXY is going to be able to hold this zone in the foreseeable future. So that being said, guys, the expected move for OXY right now is 59.16. So let us go have a look on OXY if we can find any premium below the $59 level. So let's have a look. OXY is not that volatile, guys. So usually you need a big move down to get any premium below the expected move. So right now we're looking for anything below 59.16, but you can see on the options chain, the only juicy premium that's available right now is on the $60 strike. So what we need to be a little bit patient for, guys, is if ever on the Monday or Tuesday session, we have a little bit of a dip down here into the low 60s or maybe even the high 59s, that will probably free up either the $59 or the $58 strike. I want one of these two strikes leading into this week myself, looking like a fairly decent trade. So that is pretty much the setup that we're looking for on OXY. But like I said, guys, this one may take a little bit more time. Even if we do potentially get a sign down here, I still do believe that they will be able to roll this back eventually. And it's one of my favorite stocks, especially in the energy market, which should be, it should be a favored sector with the value rotation that we're seeing right now, and really shouldn't be affected by too much this week, except for on the Friday session when we get Exxon and CVX, right? Chevron, but I'm not really expecting those to have any impact throughout the week. So we're kind of looking to get into OXY and maybe get out before those earnings hit on the Friday session. Should be a relatively simple trade if you ask me. Now, the fourth trade we're going to be looking at, guys, is Google. Now, I know what you guys are going to say. Yes, we do have other large tech earnings this week: AMD, Microsoft, Amazon, Apple, and Meta, of course, which could drag down on Google's share price a little bit. However, the reason I like Google, guys, they've already reported earnings. We are coming up into daily oversold conditions, and Google is representing right now a 13% dip from the all-time highs. Now, keep in mind, whenever we have a 13 to 15% dip on Google, guys, in the context of a bull market, it's usually always been a good buying opportunity. Take a look at this dip right here, 14%, great buying opportunity. Take a look at this one right here in October, right? 14%. Great buying opportunity. Take a look at this one right here. You can see 10%, great buying opportunity. Let's go back to another bull market, 2021, right? Take a look at these dips. Every time we get a 10 to 15% dip on Google, these are tiny, right? Take a look at this one right here, 16%, usually a good buying opportunity. This one is COVID. We're not going to look at that. Take a look at this one right here, 18%, good dip buying opportunity, and the list goes on, right? So you obviously understand by now that whenever we have Google anywhere between 13 to 16% on a sale off of most recent highs, especially leading into daily oversold conditions, it's usually a decent opportunity to get a little bit of a bounce. And that is exactly what we're looking for this trade. So that being said, the expected move on Google right now is 163.32. Now, I'm going to be looking for maybe in the gap fill region. Think of maybe 161, 160s all the way down here below the expected move, very close to our 200-day moving average as well. So let's take a quick look on Google, guys, and see what potential we can have on Google. I love this stock in the lower 160s, guys. The valuation is very, very good down here, and I think their earnings were very nice. We covered them on the channel as well. So really, I would have no problem at all being assigned Google, even with all of this volatility, guys. No problem for me being assigned Google. I want the stock down below, and I think that's one of the integral part of the strategies, guys. You need to want to own the shares, because if I get assigned Google down here with daily oversold conditions and with a 15% dip, we are going to get a bounce, and the bounce will be extremely juicy, and we're going to be able to really milk this trade for a lot of money, in my humble opinion. So moving on to Google, guys, let's go see what is the options chain saying. Can we find any premium below 163.32? So let's have a look. So moving into Google right now, you can see at the 162.5s, we do have a decent amount of premium right here, right? So for Google, it's going to be one of these two strikes for me, depending on the move on the Monday or Tuesday session. Obviously, if we gap down on the Monday or Tuesday session for some reason, down, let's say, into the 167, 166, well, then probably you will have a lot of premium freed up at the 160s. So far, there's only enough premium at the 162.5s. You would need to see at least 81 cents right here, and that is being respected. At the 160s, there is not enough premium. You would need to see about 80 cents. So for the 160s, you would need to see a little bit of a drop on the Monday or Tuesday session to free up those 160 strikes. However, myself personally, I would not be opposed to taking the 162.50s for about 92 cents if we can find it on the trade, right? So Google, I really like this setup, guys, and that is in spite of our earnings volatility that we have coming up this week, just because in terms of only Google, usually it's always been a great value proposition to buy this company when it is 15, 16% off the all-time highs. And if ever we get assigned at 162.50, guys, that is exactly how much we will be off. 162.50 is literally 16% off the all-time highs. A heck of a buying opportunity for Google stock, in my humble opinion. So that is just how I'm going to be playing those ones. And so the fifth play of this week, guys, is going to be Airbnb. And I really like this one a lot, guys. It's coming into a very large area of consolidation. You can see very generous area of support back here. Big resistance for the markets. Should be acting as current support for the bulls as well. That is why I like this one. The valuation is not too bad at about 135. And usually the summer quarter for Airbnb is one of their better quarters. Now, this one does have earnings in about 2 weeks' time. And I do think that it should be a very good quarter for them. That being said, we have got a nice little sell down opportunity into this zone, and we do have an expected move this week of 135.50. So I want to be shopping as low as possible below the expected move, guys. Think 135 down to about 130. Let's go have a look on Airbnb options if we can find anything below that expected move. So let's go shopping real quick. Moving on to AMD. So if you take a look at the Airbnb, if you take a look at the Airbnb premiums, guys, you will see that as a matter of fact, we do have some decent premium even below the expected move. So 135.49, we actually have some at the 135 level, about 82 cents. That is a decent amount. We even have some premium down here at the 134s. So what I'll be looking for on Airbnb, if we get some continuation to the downside on the Monday or Tuesday session, it may free up even lower strikes, guys. The ones that I'm favoring this week for Airbnb myself are going to be from 134 all the way down to 131. It all depends on the size of the move down on the Monday or the Tuesday session. We want to be going once again as low as possible in this green box of support. So think once again 134 all the way down to roughly 131. Those are going to be the desired target strikes while still getting 0.5%. At a first glance, 134s, 133 look good, but if we do drop a little bit more Monday and Tuesday, then probably I'll be going with the 132s to 131s. So hopefully that makes sense for Airbnb. That's pretty much everything for the top 5 options plays of this week, guys. Now, I do have a bunch of other bonus plays. Now, a lot of these are also going to be for post-earnings plays, not before, after earnings if it drops, right? So number 1 is going to be Palantir. I'll always have this one on the back burner, guys. Palantir probably going to be looking for some short puts. If I can find them, if we get a little bit of dip here on the Monday or Tuesday session, down below in here, 24.50. I like this location right here. Previous resistance, current support for the bulls right down there. And obviously Palantir is a very well-run company as well, to say the least, looking for the weekly higher low for potential further trend continuation. So Palantir, I will be on the watch for this one over the course of the week if we get a little bit of a dip early on in that week. Now, moving on, guys, one that I will definitely be looking for as well is SoFi, but SoFi has earnings Tuesday before the open. So let's say when the market opens, let's say SoFi reports earnings and they have a massive gap down right here. Let's say they go down 7-8%. I will be looking for, guys, either one of two strikes. If SoFi has a relatively muted earnings and comes down not so much, let's say they come down only about 3-4%, closer to $7, I'll probably be looking for the $7 strike. This whole area is massive support, guys, 7 all the way down to 6. However, if SoFi has really bad earnings that are not well received and comes down 7, 8, 9, 10%, then I'm going to be looking for 650. The beautiful thing is that we will know the extent of the drop, before the earnings, or sorry, before the market before the market opens. So $7 to $6.50, depending on the size of the move down. Stock number 3 I'll be looking at, guys, is UPS. UPS obviously just had their earnings. We covered it on the channel, and we are now coming into daily oversold conditions. And this stock has been absolutely crushed in the past, pretty much, let's call it the past 2.5 years at this point, coming into a very large area of previous resistance, which could be current support for the stock. So UPS, I will be on the watch for this one. If ever we continue to drop into the early portion of the week, I like 124 down to 120, guys. Love this location when not buying being assigned, because I do believe that when the UPS bounce does come, it will be a fairly good one, in my humble opinion. The company has guided that this will pretty much be their last bad earnings quarter and have signaled that volume, in terms of package volume, is now on the upswing after 9 straight quarters of declines. That's why you've had your 2 years worth of drawdown. In other words, I really do believe, guys, that this is the last location that UPS may find its temporary bottom in before we start a longer recovery mode for the stock. So I like this one at these levels. Now, the other stock, guys, is going to be McDonald's. So McDonald's is looking very nice as well. McDonald's, you guys know, I have played this one a lot in the past in this region. I have been building a little bit of a position. Why? Very simple, guys. 200 weekly moving average. Every time McDonald's has touched the 200 weekly moving average, except during COVID, usually it has respected it. You can see back in 2014, 2015, usually always a decent buying opportunity for McDonald's. Couple that with the fact that we are at the monthly 50 EMA. Usually same thing, guys, always been a decent value proposition buying McDonald's when it hits the 50 monthly moving average. So that is why I really like this company at these lower levels. So I will be looking for them after earnings on the Monday session. If we get a little bit of a gap down here, if earnings are not well received by the company, maybe looking to go shopping, guys. 240, 237.50 could be an amazing buying opportunity for such a solid company in the markets. Just looking for that eventual recovery on the monthly as well. The bounce is coming on McDonald's, guys. It's just a matter of when or not if, right? We know this company is going nowhere at all. Now, moving on forward, guys, the next company we're going to be taking a look at is ON Semiconductor. So ON Semiconductor, they also have earnings on the Monday morning session before the open. And I really like this location for ON Semiconductor, guys, talking about the 71 all the way down to about $60 range, right? Very nice area of support for your bulls. If ever earnings are not well received and we get a gap down open, let's say we really come down hard into this lower location right here, guys, lower $60, $61, $60, depending on the size of the move, of course. I will be looking maybe to play these earnings after the fact. 60 all the way down to $58 could represent a very generous buying opportunity for this company, in my humble opinion. Now, the other one we're going to be looking at, guys, is another after earnings play. AMD Tuesday after the close. So this one will be for the Wednesday morning session. Now, AMD has come down a lot. We are already daily oversold conditions on this one. Let's say we get a bounce on the Monday and Tuesday session, and then for ever which reason, earnings are not well received and we get a big move down. Usually AMD moves about 8 to 10%. So in the event we get a 8 to 10% move down, guys, I will be targeting the lower 120s, 120 all the way down to about 115. Tremendous buying opportunity for this company, in my humble opinion. So this is the location I'll be shopping for AMD. At that point, daily oversold conditions will be absolutely crushed. And I do believe it should be a nice dip buying opportunity for such a glorious company as well. This one, guys, should have most of their best earnings ahead of them. As a matter of fact, you can see the EPS ramp coming 2025 and also the revenue ramp coming 2025 as well, as a byproduct of their data centers being at full capacity and at scale. So that's the level I want that one at. Next one is going to be Visa. So Visa, I would have put this one on the list for this week, except for the fact that MasterCard earnings is coming on the Wednesday morning before the open. I don't believe that it's going to represent a very volatile session for Visa as a whole. MasterCard never really moves more than 3-4% after earnings up or down. And I like this location, guys. 250, 250s, 250 on Visa. Easy money, in my humble opinion. 4 months worth of consolidation at this point, right? Just hunting for the inevitable monthly high or low. This is a all-time high breakout, retest of the all-time highs and potentially run. Nothing wrong with these companies at all. I love them in these levels. So that's the one that I'm going to be looking for on Visa this week. 250, 250s to about 250. Now, if you want to take a little bit more risk, you can obviously play these before MasterCard earnings, but MasterCard Wednesday before the bell should give us a better indication. So if ever Visa drops after MasterCard earnings, coming to this low region right here, 250, 250, 250 should be a no-brainer buy, in my humble opinion. And the last one, guys, can't do a bonus plays without NVIDIA, right? So NVIDIA obviously has been on the decline with the rest of the semiconductor industry. But that being said, we're coming up on my preferred buy location for the company, which is pretty much 105 down to about $95. So if ever earnings are not well received by AMD after the close on Tuesday, and we have a little bit of a dip coming into the Wednesday session, maybe Microsoft earnings are not well received either. Let's say Wednesday opens bright red, and we get a nice dip on NVIDIA back down towards the 105. At that point, guys, I'm probably going to start going shopping for NVIDIA short puts, 100 down to 95. That would represent a tremendous buying opportunity. Previous resistance should be newfound support for the bulls, and that would represent a very nice sell-off from the top, guys, all the way down to about 100 to 95 is 30 to about 35% worth of sell-off. The exact same percentage as well, more than the percentages we got in the month of April on that sell-off, and all roughly the same with the one down here as well, 21%. So usually when we find NVIDIA anywhere down 25 to 30% off of recent highs, could be a nice buying opportunity. That's why I'm looking to get this one for a little bit of a bounce if we come into that zone. So those are pretty much all of the bonus plays. And so that's pretty much everything for today's video, guys. Hopefully you guys enjoyed it. If you did, consider dropping a like. Would appreciate it for the growth of the channel. Also, consider subscribing if you're new. Would love to have you here, guys, to do these videos every single Sunday night in preparation of the upcoming week. And don't forget to also watch my daily market recaps that we do Monday through Friday after the close to have more real-time trading updates of what I'm doing specifically. And now lastly, guys, if you have any questions at all on the strategies or maybe some stocks that you're looking at, please feel free to leave them down below in the comments, and I'll be happy to engage with you and reply to your comments, usually within the first 24 hours. So that's pretty much it, guys. Take care. Have a very good week of trading. Hope to see you forward in the upcoming weeks in the daily market recaps. Peace.